couple of big highlights for 2014 as we look back on the year. Long duration municipal bonds. National municipal bonds that have the long duration. Last winter, everybody was expecting the shorter duration to outperform longer duration, and the exact opposites happened during the course of the year. You can really see that in the case of national municipal bonds, where the longer duration, some of those funds are up on an NAV, high teens % year to date, whereas the intermediates are, low double digits, high single digits. And the other thing is the S&P. I think last year at this time, people were expecting the S&P or the U.S. equity markets in general to be up, 5 to 10%. Sitting here in the middle of December, the S&P 500 on a total return basis is up, about 12%. So I think that it's been a really good year another really good year for the U.S. equity markets, and good year for long duration on national municipals as well. I think a couple of disappointments in 2014 came about. One area would be closed-end funds that focus on senior loans. Senior loans historically have been an asset class where people who want to take advantage maybe of rising rates would get in. And I think in 2014, as more and more investors became aware that the Federal Reserve wasn't going to raise short-term interest rates until 2015, investors thought, well, why do I need to be in senior loans or in senior loan closed-end funds? And so what we saw throughout the course of the year was the senior loans on an NAV basis, the underlying portfolios have held up decently. They're up, maybe 1%, 2% on average. But on a price basis, they're actually negative. They're down about 3% on average. When you look at the MLPs, that's the second disappointment, I think, of 2014. Held up well throughout the course of the year, except for in the last month, as oil prices have slid. All of a sudden, the volatility in these leveraged funds, we see the NAVs, average NAV from MLP C Corp closed-end funds is negative, and so is the share price, unfortunately. When closed-end fund investors look at 2014 in terms of the broad history, say, of closed-end fund performance, one of the things that sticks out is that last year we saw discounts widen significantly for national municipals in the fourth quarter of 2013, and that hasn't really, it started to narrow in the spring, and then they stayed wide, and we've seen that throughout all different groupings of closed-end funds, if you will. That discounts seem to have just kind of gotten stuck, almost like investors can't believe. Like I was saying, the longer duration has outperformed shorter duration in the municipal space, and the discounts suggest that people just the average closed-end fund investor just can't believe that that's happening, and so the discounts have stayed wider or gotten wider. And so I think when people look back, it's odd to have a year as good as we've had with closed-end funds, where overall with closed-end funds, where the discounts have widened to this extent.
For more information and data on closed-end funds, visit our sponsor, cefconnect.com, the authority on closed-end funds. This is Closed-End Fund News. Thanks for watching.